Today we tackle audit programs. The audit program is that insane checklist of procedures that gets performed by the audit team to gather evidence. There are basically three types of procedures that get listed on the audit programs: test of controls, analytical procedures, and test of details. Each transaction cycle will have its own audit program with a mix of these types of procedures that will vary depending on the risk assessments established during the audit plan. Let's begin with the test of controls. As a reminder, tests of controls are undertaken for one of two reasons. First, it's our hope that by relying on the client's controls, we can reduce the amount of substantive evidence we will need to gather in the test of detail phase. Or second, it may be the only way we can test certain objectives. For example, certain electronic or paperless systems may not generate a visible audit trail for the auditor to inspect. Our approach for testing controls, assuming we intend to place reliance, has three steps. Step 1, identify the relevant control objective. You can think of this as the management assertion that poses a material risk. Step 2, identify a key control in the process that addresses that specific assertion. And then step 3, develop an appropriate control test. Next, we need to plan our analytical procedures. Now, we have already discussed how analytical procedures are conducted through the audit engagement. There's no prescribed way to do analytical procedures. You need to use your professional judgment and your financial savvy. Most analytical procedures use ratios and trend analysis to identify areas that look out of the ordinary and require further investigation. Now, further investigation entails documenting management's explanations for the variances and gathering additional documentary evidence until you get to that warm, fuzzy feeling. Finally, we have our tests of detail. Tests of detail focus on establishing the monetary correctness of the accounts to which they relate. It's critically important to nail down evidence to support the assets and liabilities at the specific moment of the fiscal year end. In doing so, we are indirectly gathering evidence for transaction-based assertions. Well, at least in total. The classification of the income statement might not be proven using this approach. However, as we've discussed, accounts like revenue are often high-risk areas, and we would perform tests of detail directly on these accounts as well. Tests of details can be reduced by the work we previously performed on the controls and the analytical procedures we just discussed. The astute folks in our midst might pick up on the fact that we could be looking at the same evidence as we perform both our tests of control and our tests of detail. And this is true. And our audit programs can be tailored to capture this efficiency opportunity by performing what is called a dual test. And a dual test saves us the effort of having to pull and inspect the same invoice more than once. Sometimes we are confronted with tight deadlines to finalize the audit. To minimize the turnaround at year-end, the auditors can perform what is called interim procedures at a time in advance of the year-end date. Now, roll-forward procedures can be used on the balance sheet accounts to enable us to perform tests of detail a month or two in advance of the year-end. For example, because of the tight deadlines, we may not be able to send out and receive accounts receivable confirmations for December 31st, and as a result we might choose to confirm the November 30th balances instead. And then we would perform work on the controls in place as well as recalculate the roll forward of the balance to ensure that it's not materially misstated at December 31st. Audit programs are often based on a preset list of procedures that are embedded within software. The audit manager tailors the audit procedures to fit the circumstances of the client. For those without software, there are standard audit programs available for purchase, such as the CICA's Professional Engagement Manual. Auditors rarely sit down with a blank piece of paper and begin drafting audit procedures from scratch. However, that said, the tailoring of audit programs to fit the circumstances and the evidence sought is a core professional skill of the auditor. So let's wrap up this discussion about audit programs by keeping in mind that we have three different types of procedures and the costs associated with each of these procedures. Analytical procedures are the cheapest form of audit procedures. Test of controls are generally the next cheapest. And finally, the test of details tend to be the most expensive. Also, I think it's important that you understand and differentiate between the test of controls and the test of details. You should now be able to project forward the implications of your findings arising from both of these types of tests. When we find errors in our tests of detail, those errors represent misstatements. Contrast this with when we find errors in our test of controls. And in this instance, the so-called error does not necessarily imply a misstatement, but rather simply that we cannot rely on the control as much as we had possibly hoped. And as a result, we'll need to do additional substantive work to validate the account. And finally, let's realize that there is a trade-off between testing controls and performing substantive tests. This gives the auditor flexibility in how they approach the audit, and there is more than one way to reach a supported conclusion. Let's take a look at the chart presented here to make a conceptual connection of this trade-off between a controls-based audit and a substantive audit. The 3 points marked C1, C2, and C3 represent the flexibility the auditor has in assessing control risk at various levels of low at C1, medium at C2, and maximum at C3. Note that the substantive procedures can never be eliminated, nor is there a perfect linear relationship. To the right of the point marked B, substantive work cannot be reduced any further. So you are always going to have to perform some form of substantive work. There's no such thing as a purely controls-based audit, which is why they call that approach a combined approach. So there you have it. Audit in a box. Well, you know what I mean. Until next time, don't stop till you get to the top. When you get to the top, don't stop.